While the stock market was crashing, this stock was up over 200%. Let's see why. During the 2008 global financial crisis, the S&P 500 was cut in half, dropped minus 50%. And even 5 years after the bear market started, the index was still down, minus 19%. This company, for example, TJX, is a high-quality compounder, and we'll see why. Over that same time period of 5 years, the company grew by over 200%. We want to understand why this high-quality company was able to weather the financial storm and how we can find other companies that can do the same. Here's a quote about quality from investor Zhang Lei. Quality is defined by one question: is time your friend? Quality is a protective moat that allows companies to grow and thrive through unpredictable economic cycles. So that's what we're looking for. These businesses are also known as compounders, as they compound over time. And the reason is that they can take their earnings and reinvest them into their systems to create long-term growth and more value over time. So a few examples are franchise businesses, think of Domino's Pizza, recurring revenue models, think of Netflix with a monthly subscription, as well as businesses with robust intangible assets, intellectual property, goodwill, patents, copyright, as well as brands. So think Apple with its strong brand and intellectual property. And so these businesses can create a moat through their high quality intangible assets, business models, what have you, that is difficult for other businesses to reproduce. One metric that can be a shorthand for this is ROIC, which we've studied in the past. So ROIC, return on invested capital, gives us a sense of how strong that competitive moat is. And the higher the ROIC, in a sense, the higher quality the business is, which can invite competition. And yet, if a business is able to sustain a high ROIC, that suggests they have an edge. They have a competitive moat because other businesses are not able to eat away at that and try and reproduce their business. And so ROIC serves as a proxy measure, but we also want to see if these compounders can compound over time. And so the way we will look at this is through the interplay of ROIC and IC, invested capital. So what we're looking for in ROIC over time is a trend that is high and steady as invested capital is growing. And ideally, we can find an ROIC that is increasing as invested capital is growing. So these are businesses that can maintain a strong moat over time. They can hold off the competition. Now, during the good times, this is wonderful news. You have a business that has a high return on capital. So the more money you put in, the more profits that business can generate and can continue generating through reinvestment. This is great during the good times. You can beat your competition. What about during the bad times, the financial storms? So during these times, the business can maintain that moat. They have that pricing power. They have that relationship with customers. They have the brand. And so while the other competition is going out of business because they can't keep up, because they don't have that protective moat, high quality compounders can survive. They can weather the storm. Even if they take a hit, it will not be as bad as the competition that is low quality and swept away in the storm. So let's look at an example of this through TJX. So here we are at ValueGlance.com. We're looking at the Stocks tab here for data visualization of TJX. So this is the company behind TJ Maxx. So it's in the apparel and retail industry. But what we're interested in looking at here is during the 2008 global financial crisis. So let's go some years before and zoom in on this window here around 2012. And so we can see that crisis happening 2009 and the stock market again being down through 2012. Now what we're looking at here is the ROIC, return on invested capital, relative to the WACC, the cost of capital, which we've studied in the past. And what you'll notice is that over all of these years, TJX has maintained a high and steady ROIC. So this is a good sign for a high quality business. It's able to maintain that moat over the competition. Now we also want to see if it was compounding this whole time. And so we can go down here, we can add in IC, the invested capital. And so now we can look at the trend between invested capital and ROIC. And what we find is that through the financial crisis, TJX kept compounding. IC continued to grow while the ROIC was high and steady. And we could even see through 2008 through 2009, it was actually increasing. So IC was going up, the business was compounding away, and the quality maintained its high and steady ROIC. This is the fingerprint of the compounder that we want to look for. Now you might say, well, this was just one cherry-picked choice. Perhaps, but you can go through and look at other high-quality businesses that even before the financial crisis maintained this high and steady ROIC while invested capital was growing. So this is one signature of the compounders that we can use by visually looking at the interplay between these two metrics to find high quality companies. Now we can go ahead and add in price down here. And we can see, yes, it did take a hit during the global financial crisis. But what we'll notice is that even 5 years out, while the market was still down, the price here was running away. Why? Because even if there was this irrational hype and overshoot in the short term, in the long term, the business continued to create value. And eventually that was recognized by the market. And so this is the advantage that compounders have. During the good times, they can continue creating long-term value. During the bad times, they can weather the storm because of their high-quality moat. So if you want to analyze the ROIC-IC trends for your favorite stocks, check out ValueGlance.com. And you can sign up for our free Substack newsletter. There's a code in there to get 1 month free. If you want to learn the deep dive strategy, why ROIC is a great metric for the long term, and how quality can beat the market, check out Stop Checking the Price, my book available on Amazon. With that, I wish you luck preparing your portfolios for any financial storm to come by holding on to those high quality compounders.